No money down falls flat. Now, this is an article from Thursday, March 29, 2007. I'm going to give you the link to it because, for whatever reason, it's become harder and harder to actually find it. It was very difficult for me to figure out what the name of the author was, and it was even more difficult for me to look it up because it seems that the original page that hosted this article is no longer in existence. Now, the author's name was Kevin McKern, and he was located in Ashfield, Australia. So he was in South Wales, Australia. And I guess he was writing overseas instead of in America. But it didn't take away anything from how accurate his information was. So the story, No Money Down Falls Flat, I'll give you the link because you'll be able to read the entire thing yourself. So it says, today's pop quiz involves some potentially exciting new products that mortgage brokers have come up with to make home ownership a reality for cash-strapped first-time buyers. Here goes. Which of these products do you think makes sense? The balloon mortgage, in which the borrower pays only interest for 10 years before a big lump sum payment is due. The liar loan, in which the borrower is asked merely to state his annual income without presenting documentation. The option arm loan, in which the borrower can pay less than the agreed upon interest and principal payment simply by adding to the outstanding balance of the loan. The piggyback loan, in which a combination of a first and second mortgage eliminates the need for any down payment. The teaser loan, which qualifies a borrower for a loan based on an artificially low interest rate, even though he or she doesn't have sufficient income to make the monthly payments when the interest rate is reset in 2 years. The stretch loan, in which the borrower has to commit more than 50% of gross income to make the monthly payments. Or G, all of the above. If you answered G, congratulations, not only do you qualify for a job as a mortgage broker, but you may also have a future as a Wall Street investment banker and a bank regulator. No, folks, I'm not making this up. Not only has the industry embraced these innovations, but it has also begun to combine various features into a single loan and offer it to high-risk borrowers. One cheeky lender went so far as to advertise that it was dubbed a ninja loan. No income, no job, no assets. In fact, these innovative products are now so commonplace, they have been the driving force in the boom in the housing industry at least since 2005. They are a big reason why home ownership has increased from 65% of households to a record 69%. They help explain why outstanding mortgage debt has increased by $9.5 trillion in the past 4 years. And they are unquestionably a big factor behind the incredible run-up in home prices. When you offer this many loans, it makes it higher demand in the market. So therefore, you have less supply, which is exactly what we're experiencing now. Right now, you have a president who's trying to cancel $10,000 worth of student loans out of whatever it is they owe. And then he was trying to originally, when he first got into office, if you look into the news, Biden wanted to eliminate the credit score system. Now imagine all of these people that you know are credit risks, that you know are always bumming for money, that you know never pay people back, even when they borrow small amounts of money. And they want to allow these people out loose to run around and be able to buy houses with no credit checks, no FICO score minimums, and no money down. Just think about that for a second. So anyway, how did we get to this point? It began years ago when Louis Ranieri, an investment banker at the old Salomon Brothers, dreamed up the idea of buying mortgages from bank lenders, bundling them and issuing bonds with the bundles as collateral. The monthly payments from homeowners were used to pay interest on the bonds, and principal was repaid once all the mortgages had been paid down or refinanced. Thanks to Ranieri and his successors, almost anyone can originate a mortgage loan. And I know that's true because I used to do that as a job a long time ago. Not just banks and big mortgage lenders, but any mortgage broker with a website and a phone. Let me make it even easier for you than that. If you want to originate a mortgage loan, all you need is a phone and a phone book. Now, we don't really use phone books anymore because we got the yellow pages and the white pages on the internet. But for the most part, that's exactly what it is. It's a phone book. So some banks still keep the mortgages they write, but most other originators sell them to investment banks that package and securitize them. And because the originators make their money from fees from selling the loans, they don't have much at risk if borrowers can't keep up their payments. And therein lies the problem. An incentive structure that encourages originators to write risky loans, collect the big fees, and let someone else suffer the consequences. And therein lies the problem. An incentive structure that encourages originators to write risky loans, collect the big fees, and let someone else suffer the consequences. Oh, your son barely graduated out of high school? Well, how about you send him here to North A&M Texas University and he can major in underwater basket weaving. Tuition is $30,000 a semester, and his room and board is going to cost another 10, with his meal fee for the year being $5,000. But don't worry about it. All you got to do is sign this loan and he can come here, no problem. Oh, your daughter, your teenage daughter wants to go to Las Vegas University? How did she do in high school? Oh, she barely made it out because she was cutting class, sleeping around, getting high on weed. Oh, well, that's no problem at all. All you got to do is just sign this promissory note and we can lend her $50,000 a year to move from New York to Las Vegas to go to Las Vegas University. And she can be in a great degree program where she'll stay here for, let's see, it's $50,000 per year, but she's going to take about 7 years to graduate because, you want to get your master's degree too. And who knows, maybe she'll go even longer and get her PhD. So she could be here for 10 years tops. She could have 2 masters and a PhD in 10 years, and she can just borrow $50,000 a year. And we'll take care of everything. She can stay on campus. She can stay in a dorm. We have her meal plan. We'll take care of everything. Just sign this. I think you understand where I'm going. This was back in 2007. They were writing bad loans. And part of the reason for that is because these so-called mortgage brokers, the mortgage brokers charge a fee to put the loan together. And usually the mortgage brokers, what ends up happening is they take your credit, they shop around for the best rates. Because they usually deal with certain lenders more than others, those lenders are giving them better deals, and the mortgage brokers are bringing those lenders high volume because they're finding more and more clients. So the lenders are paying these brokers $10,000, $15,000 a month. And these people are making commission like you wouldn't believe. It's sad because, here's the thing. I don't like talking about money because people would either assume you're lying or they assume you're embellishing. But what would you say if I told you that I was working in a mortgage bank and one of my partners, for the Christmas of that year, for this year, and it wasn't 2008, I think it was either 2006 or 2007. It was 2006 Christmas going into 2007. He made about $14,000. I think he had closed 3 or 4 loans probably. I think it might have been 3 because this was a long time ago. This was 2006. And he got about $14,000 on a personal check from the boss of that mortgage bank. Got about $14,000. And I think he made a little bit more the last month. But because you're working on commission, You're getting a personal check. Now, mind you, this doesn't have taxes taken out of it. And he walked out of there, $14,000. I'll never forget that. Walked out of there with $14,000 on a personal check. Now, as soon as I swear, I can take you back. I can take you back in memory lane. When we would get paid at that bank, we would leave that bank and we would literally, let's say it was Friday, because that was the day they'd pay us. We'd get Friday, they'd pay us at the end of the day, and then we're leaving, right? Most of these dudes opened up bank accounts down the block. I swear to God, I can't make this up. Bank of America. Now, there was some dudes who had bank accounts at Chase, and there was some dudes who had bank accounts at like Citibank. But right down the block, there was a Bank of America. We would get up all together Friday evening, day's over. We'd get our checks. We'd get our pay for the 2 weeks because we were paid biweekly. We would go down to Bank of America. And when we'd walk in, let me tell you something. You know how you saw that movie Wolf of Wall Street? Now, those dudes in Wolf of Wall Street, those were multimillionaires, all of them, because they were obviously in fraud and stealing money with that Steve Madden scam. Now, these people were multimillionaires. We were not multimillionaires. We were like 100,000 heirs, if I could make up a term. We'd walk down to that Bank of America, or we'd drive down to that Bank of America, whatever it was. Some of them had cars, some of them didn't. Some of them took the LIRR, the Long Island Railroad. But we'd walk down to that bank. Well, let me tell you something. When we'd walk in there, you'd have thought Brad Pitt, Leonardo DiCaprio, John Wick, you'd have thought they walked through that door. We were like fucking celebrities. When we'd walk through that door, you had these female bank tellers, and they, the boys are here. The bank manager, I'll never forget, the bank manager, this dude was sitting in a desk to the left of the door. This dude jumped up. Guys, can I get you coffee? Can I get you anything? The fucking bank manager. Can I get you anything? Oh, do you guys want some snacks? Let me tell you something. We would go up to that bank, the teller. We go up to those female tellers, these young Spanish girls. It's usually like young Spanish girls. Sometimes it was young white girls because they had different shifts. Oh, how much would you like to deposit? Yeah, okay, well, this is a $10,000 check. I'm going to deposit $7,000 and I'm going to take $3,000. We're going to go out drinking or we're going to go out and have some fun. Let me tell you something. You could almost get a mop because those chicks, those bank tellers, they were wetting up the floor, if you get my drift. You could get a mop. You could get one of those new mops with the swift top that you click off for your pet because they were wetting up the floor when they were looking at them checks. Now, these are bank tellers back in 2007, so you know they didn't make that much money. They were bank tellers. I mean, I think at the most they make like $35,000, maybe $40,000 a year. These dudes walking in $10,000, $15,000, $20,000. I don't even want to tell you exactly how much I met because somebody will just call me a liar. But the bottom line is these chicks was getting wet back there. Wet back there. The manager was getting wet, and it was a guy. Oh, guys, can I do anything for you? You want to sit down? Well, no, this line is long. Christy, you open up another machine right now. Man, let me tell you something. It was like fucking celebrities walked in there. First thing I did when I saw my friend's paycheck, I swear to God, this is the first thing I did. I said, hey, when do you pay your taxes? I swear to God, I asked that. See, I'm no fun at parties because I actually fucking think. It's like, hey, when do you pay your taxes? Oh, yeah, I'll take care of that. That's what he said. He's like, yeah, I'll take. Well, fast forward, because I don't want to stay on this part too long. I'm going to give you the link to this article. You can read it yourself, because I think you got my drift. My friend ended up getting sued by the IRS for over $75,000. I think he settled for a little less than $50,000 because he wasn't paying his taxes. The majority of those dudes I worked with, because here's the problem. If you fuck with the IRS, they go and get you one way or another. A lot of those dudes I worked with, a lot of them ended up either in jail, very short prison terms, nothing major. But they ended up going to jail for some crimes, because some of them were on drugs. Some of them actually dealt in drugs because, the problem is when you get that kind of money, you start doing stupid shit. I knew some of them who would drive drunk. Like, for instance, they would get into the fucking car. We'd go to the bar across the street from the bank, and they'd go to the bar, and they'd get Long Island iced teas, and then the motherfuckers would get in the car and drive. And I'm like, wait a minute. You're not supposed to be fucking driving. And most of the time I'd be like, you know what? Instead of you driving, I'll drive. Because, I actually want to make it to where we're going, alive. But these dudes would drive drunk. These dudes would get high. These dudes would buy cocaine and shit. Some of these dudes would, weed was a common thing, so I can't even argue about that anymore. But let me tell you something. Even my then boss, and I can't make this up, my then boss right now is under federal indictment for laundering millions of dollars. And the story is in the newspaper. The boss who I had then is right now under federal indictment. I swear to God. Bottom line is this. It says this moral hazard, as economists call it, has been magnified by another innovation in the capital markets. Instead of packaging entire mortgages, Wall Street came up with the idea of dividing them into tranches. Now, okay, I'm going to stop here because if you haven't seen the movie The Big Short, that's what you need to watch. If you watch that movie, The Big Short, it will help you completely understand everything you need to understand. This article, along with The Big Short, if you can understand the movie The Big Short and you can understand this article, then you'll understand everything that happened, which pretty much led up to the 2008 financial crisis. If you are subscribed to me, you'll notice that I have a playlist called Market Watch. All of these article reactions that I do are in that playlist. And if you look through that playlist, you'll see all of the things that I've talked about credit, debt, student loans, mortgages, so forth and so on. So I just want to let you know that. So if you're subscribed to me, you should be able to see that playlist. So why did I read No Money Down Falls Flat? I read it because I wanted to lead up to what's happening now in September 2022. So MoneyWise, Chris Clark is the author. MoneyWise has an article today. 2008 all over again. Bank of America just launched a test of zero down payment, zero closing cost mortgages for minority communities. Now, this is what I ultimately believe before I even start reading this. I believe not only Wells Fargo, but also Bank of America have gotten accused of racism. And some of you may know about this, some of you may not. It depends where you live, because I know I have people who watch me from other countries and they don't even have these banks. But to make a long story short, they got accused of racism. Not only that, Wells Fargo, they got caught making fake accounts. And there's a story for that. I can provide you the link. But they got caught making fake accounts, and they got caught doing some types of fraud. Now, Bank of America, they got accused of all types of things because during the subprime crisis, most people, in order to take the blame off themselves, what they did was they started blaming the banks. They're like, oh, well, I could have qualified for a conventional mortgage, but they sold me a no money down, zero interest ninja loan. And to which point I'm thinking to myself, I'm like, well, wait a minute. You're the person who's supposed to be understanding of this enough to go and apply for a loan and buy a house. So how did you let them sell you something that you should have known was not a good product at all? Like, for example, if you have a credit card and the credit card tells you the interest rate and tells you up front the interest rate is 20%. And then you have another credit card where they say not only is our interest rate lower than the last one, our interest rate is 10%. However, there's a $200 a year fee. Well, then the question is, which one are you going to go for? The answer is you go for the one without the fee, but then you pay your bills on time so that you never end up having to pay the interest rate. That's the answer. Now, here's the problem, though. You've got some people who were so desperate to keep their houses that were getting foreclosed because they stopped making the payments. You had some people who were desperate to refinance, but their credit never got any better. So the easiest thing to do was just point the finger at the banks and say, yeah, the banks are racist. That's the easiest thing you could do. If you call somebody a racist, if you call somebody a sexist, like that woman who said Apple said that they didn't give her as much credit on her Apple card as her husband, if they tried to hide behind the algorithm, kind of like what YouTube's doing and Google's doing, where they hide or they cancel or shadow ban certain people because they have an algorithm, and this way they try to take human culpability out of it. See, the thing about it is you can take a human to court, but it's very difficult to take a computer to court because a computer can't, plead fifth or can't swear on a Bible. It's easy to hide behind coding and algorithms. As far as I'm concerned, there should be no algorithm. As far as I'm concerned, the only things that should matter is what's trending. But they are able to use these algorithms to shadow ban people. For example, I can tell that a lot of influencers on YouTube, I can tell they've been shadow banned. I don't believe I've been shadow banned, but I know that they're fucking up my numbers. I know they are. Certain videos of mine that I never expected to get traction, and other videos fall flat. Now, before they started and I'm a personal person to attest to this, before they started that COVID fucking algorithm bullshit, my average video was like 10, 20, 30,000 views. That was my average video. As soon as they started with this algorithm shit, all of a sudden now the videos are, 1,000, 2,000, 3,000. And I've noticed with some other content creators, when they go live, you don't even get the notification. And you've probably felt this too. When some of these quote unquote controversial influencers, when they go live, you don't even see them. For example, I can't make this up. I barely ever heard of Andrew Tate. Barely ever heard of him. Now, a lot of people knew who he was. I honestly didn't know who he was. When I may have heard the name in the distance, in an echo, but I never was recommended his stuff. I never saw it. Then this guy, Logan Paul, after that shit that he pulled in Japan with the suicide forest, I almost never really even knew that he was still on YouTube because it was like any content or whatever he was making, I never saw any of it. It was never recommended. See, that's the problem. Recommendations. If the recommendations are hiding behind an algorithm, we really don't know what's happening. Now, I say all that to say this. There's a lot of good, intelligent, logical information warning people about this economy and these products. But the problem is, if you shadow ban us, if you try to shut us up, if I come out and tell you guys, listen, don't put your fucking money in Dogecoin, don't put your fucking money in Shiba Inu, that shit's gonna crash. But if they shut me up, and then they bring on MSNBC and those moron airheads at CNN and MSNBC and Fox Business News. And all of them are like, yeah, man, this Shiba Inu, man, this could be the next big thing. I mean, this could replace the dollar or something. Oh, look at this guy over here, the Dogecoin millionaire. This guy made $1 million on Dogecoin by investing. If they shut me down and they let these idiots, if they let them run rampant, especially the ones who are paying for advertising, what am I to do? What am I to do? I can keep talking and hope that someday the algorithm changes and favors me, but I shouldn't have to. If I'm putting out logical, decent information and they're shadow banning me, or shadow banning people who are putting out logical, good, decent information, trying to, like, you know how these kids always say the same shit. Oh, yeah, well, I wish they taught me this in school. Well, who the fuck's going to teach you this shit? You should be able to listen to all of the opinions, and you should be able to then do background research and verify or falsify some of those opinions in order for you to figure out what's what. When I was in school in 2000, when I was in school up until 2003 or 2005, Pluto was a fucking planet. Then After the international consortium said, no, it's not, then, the teaching changed. So the point is, if you shut down the argument, or if you make it so that some people get their points through and others don't, that's not educating people, and that's not helping people, because you're forcing them into one point of view, and that one point of view could be wrong. There's always a possibility that a certain point of view could be wrong, and there's also a possibility that timing changes everything. Like, sometimes shit can be wrong, sometimes it can change, based on the timing or based on who's involved. Now, here we are telling you that there's a problem with this Bank of America shit. But Bank of America's got billions of dollars. They can out advertise me and they could shut me up. Like, for instance, if Bank of America knocks on my door right now and they say, hey, listen, big truck, we're sick and tired of you poking at us. And because we can't simply just kill you, what we'll do is we'll sign a non-disclosure agreement. We'll give you $10 million. Shut the fuck up. Is that okay? Let me tell you something. If Bank of America did that shit, they come to my door and say, yeah, listen, here's $10 million. Shut the fuck up. Well, yeah, I'm signing on that agreement. It's like, yeah, oh, well, yeah, no, maybe you're right. Maybe you're right. Maybe I'm wrong. Yeah, but that's what they do. Anytime you hear somebody with a non-disclosure agreement, chances are there's a crime there and somebody's trying to shut somebody the fuck up. Anyway, a major American bank has launched a new program to help first-time minority borrowers finance a home purchase with no down payment or closing costs. It's a boon to buyers at a time when rising interest rates and low home inventory have stacked the deck against them. First of all, there's so much information to crunch here. I have a problem with them putting a black face on it or black or Hispanic face on it, because the problem is all this does is it creates more enmity. That's a word you probably don't hear much, enmity. It creates more enmity between blacks and whites. It's like a division thing. They're trying to divide us. And you're basically telling white people, yeah, you're white, so we're not giving you anything. And, okay, so the blacks and Hispanics get everything, right? Now, the reality of the situation is the housing inventory is so low that they can offer you whatever they want to offer you. It wouldn't matter because you can't find a house to buy that you can actually afford. They're not lending you enough money to buy a $750,000 house under these programs. It's not happening. Not only that, they want you to move to certain areas, which means chances are they own certain properties that they want to put people in. Here's the thing, though. What if you don't want to live there? What if you don't want to move to where they want you to move? Then they always are setting themselves up. If they were doing that, they could set themselves up for the possibility of somebody calling them racist and say, yeah, you're purposefully segregating people. But see, again, this is a private institution. They've got houses on their books. They've got the lending, the money. They can do whatever they want to do. My issue is the government should never be allowed to force this to happen. And they shouldn't also be allowed to stop this from happening. If Bank of America wants to take risks like this, that's their choice. But when they go under and they go bankrupt, the government shouldn't bail them out. That's how it's supposed to work. But in this system, because of this welfare state that keeps growing, it's hard to say what'll happen. So it says Bank of America's test plan is rolling out in Los Angeles, Dallas, Detroit, and Charlotte, and aimed at predominantly minority neighborhoods in those cities. It offers loans to minority borrowers without the need for a down payment. Now, that's strike number one. Closing costs, strike number two. Or private mortgage insurance, that's strike number three. You're out. And extra cost that customary for buyers who put down less than 20% of the home purchase price. The reason why we have PMI is because that's the bank's hedge against you. If you have skin in the game, you're less likely to leave. What they're doing is they're taking out insurance in case you do decide to default on your loan. So example, if you're paying PMI, they are putting that PMI on the side. And let's say you suddenly, or let's say COVID happens. oh, I can't make my payment this month. I can't make my payment for 3 months. So what did the bank do? Let's think back to what they did. They said, oh, well, listen, if you're having difficulty because of COVID, if you lost your job because of COVID, if you're having trouble making the payments, just call us and we'll try to work something out. So what did they do? In March 2020, the government basically told the banks, yeah, we're going to need to go into forbearance on student loans and we're going to need to go into forbearance on mortgages. So we're going to make it so that, the landlords won't have to pay their rent for a certain time and the tenants won't have to pay their rent for a certain time because we're going to close all the fucking factories and you're not going to be able to make no money. Sure enough, the banks, it's like, listen, they're not forgiving any of that. They're just saying, listen, you owe us 8 payments. Yeah, well, at the end of this forbearance period, we'll be looking for those 8 payments. It's like, who do you think you're fooling? These people are not in this to lose money. They want their money. So anyway, Bank of America's test plan is rolling out in Los Angeles, Dallas, Detroit, and Charlotte. Okay, so crucially, the program also requires no minimum credit score. Now, here's my thing. In baseball, you only get 3 strikes and you're out. These motherfuckers just went up to 4 strikes. No credit score. You remember what I was telling you about no money down falls flat? Well, guess what? This is that. With eligibility focused instead on a borrower's solid track record of rent payments and regular monthly bills like utilities and phone. So you mean to tell me that you're not checking my credit, but you're going to check on the things that would have made it relatively more difficult for me to actually make my rent payments on time? If you're paying $100 a month for a cell phone bill, or you're paying more in utilities than you should be paying, then what that's doing is that's actually taking away money from what you should be saving up. A phone is expensive now. You're paying damn near $2,000 for an iPhone or 2 iPhones because a lot of y'all convince yourselves that having your kids on a family plan is somehow economical. No, it's not. Your phone bill is between $200 and $300 a month. That's $200 or $300 a month you could have been using to save for something. But anyway, y'all ain't trying to hear that shit because you already know if you tried to cancel your kid's phone bill, your kid would destroy you. You know it. You know your kid might be like The Shining, and your kid might come into your room with a knife at night. Yeah, mommy, I need that iPhone. And be like, go back to bed, honey. And that kid's holding a fucking knife. And said, no, mommy, I need to be on IG. I need to be on OnlyFans, whatever it is. Y'all, see, the sad thing about it is you parents are so fucking weak. You're weakling. You're the weakest of the weak. In the good old days, if these kids got lippy with their parents, they'd slap them upside the head and not have to worry about nothing. Nowadays, y'all are afraid to look at these kids because you're afraid they might shoot something up. Y'all are afraid they might turn into Parkland. Y'all are afraid they might, Uvalde. That's what you're afraid of. Y'all are terrified of these kids. Yeah, mommy, I need that Xbox Series X. No, son, listen, I don't have the money. No, I need it now. Y'all are afraid. As soon as them kids raise their voice, y'all are terrified. I be watching you in Walmart. Those kids running your asses ragged. That's why you ain't got no money. They're just saying it costs up to $300,000 to raise a kid. I'm like, what? The fuck out of here. No, it doesn't. Y'all are spending too much money because your kid told you to. No, I need a new iPad. I've got kids in my family staring at iPads all day. What the fuck? I don't even buy shit like that. I don't have no goddamn iPad Pro. Could you explain to me why my 3-year-old baby cousin by his single mama, and I'm just going to say it because it's in my family. I can say whatever I want. Why is it that my 3-year-old baby cousin has an iPad Pro and I'm still using a goddamn iPad 4th generation Retina? Can somebody tell me that shit? Who gave her the welfare check to buy that? Oh, both of her kids have them. How do both of her kids have iPad Pros and I'm still using the fucking iPad 4th generation? How's that? Anyway, y'all ain't trying to hear that. A 3-year-old. Y'all ain't trying to hear that. Y'all ain't trying to hear that. Says, but the move quickly drew mixed responses online as Bank of America and other large lenders have been criticized in the past for predatory lending practices, especially when loaning to minority groups. Mitt Romney says a billionaire tax will trigger demand for these two physical assets. Get in now, but what? Oh, these are other stories. These are other stories. No money down loans, a timely boost. For buyers in Bank of America's test cities, the loans come at a critical time. Rising interest rates are making mortgages more expensive, no shit, and creating downward pressure on lenders to ensure their loans are as risk-averse as possible. Bank of America's program is meant to break away from this by freeing qualified applicants from down payments, credit score standards, and PMI costs. So it kind of feels to me like he's repeating the article. Basically, it says and now we get to the racial stuff. Homeownership among whites was 72.1% in 2020, according to the National Association of Realtors, compared to 51.1% for Hispanic and 43.4% for blacks. The black borrowers are denied at twice the rate of the overall borrower pool, according to a recent report from LendingTree. Bank of America's plan adds to its $15 billion program that offers closing costs and down payment assistance to low-income buyers. All right, let me explain something to you. I'm as black as I can. I'm as black as black. I'm woolite black. I'm woolite dark, motherfucker. I'm as black, but I'm the black man who's rocking the 850 credit score. I'm the black man making a six-figure salary. I'm the black man walking in with the suit and telling you you're going to sell me this and I'm not paying that much interest for it. Or I'm going to get a credit card from you and I'm not fucking paying you interest because I'm going to pay the bill every fucking night. I'm the black man who's on those business class flights while sucking up credit card rewards and filing it as a business class tax deduction at the end of the year. I'm the black man who ain't part of this denied at twice the rate. That's who I am, okay? So my question to you is, why aren't you me? It's because either you're not listening or it's because you're ignoring. And if you're ignoring, I don't give a fuck. You do whatever you want. But when they tell you no, I'm going to be the one who's in there getting it done and saying yes while you're not. I'm the black man with my student loans paid off 10 years early. When they showed me what their system was, when they showed me what their credit score system was, when they showed me what their student loan system was, I broke it and I beat it. So then my question is, well, why haven't you? Why haven't you done that? Now, as far as, the problem is when you break people down into just colors, and that's the big problem with this country. This country wants you to pick a color. Basically, you're saying, I'm either white or I'm not. Basically, that's what it comes down to. And when you do that, that's like saying, yeah, I'm either the oppressed or the oppressor. They want you to check a box. They want you to pick a color. What they don't tell you is, are these couples? I read another story. Most of these females, single moms, most of these women who may not even have children, they are the ones who are leading home purchases. But guess what? Maybe, just maybe, one of the reasons why y'all get turned down so much is because you won't make enough money. You know why? Because you don't have a man. You don't have a husband. You don't have a second income. And I'm not just saying you have to have a man or a husband, because I know some of y'all date women and stuff and marry women and you're women. But second income means a lot. When you have two incomes and you have two... I'll tell you this. Here's a challenge. I want you to show me the black couple that has over 800 FICO scores, both of them, and both of them make a six-figure salary. I want you to show me those people who get turned down for loans. And I swear to God, if you try to play me, I'm going to demand to see their credit reports. And I swear, I'm going to demand to see their credit reports and their tax returns. There are some of these people on YouTube who do not understand finances. They want to pretend that they do. They tell you All you need to do to understand somebody's history is just see their credit report. That's not all you need to see. No. The credit report is never 100% accurate, nor is it up to date. What you want to show me now, I want to see your credit report and I want to see your tax returns. And since another I must be getting tired. Since another factor of buying a house is how much cash money do you have right now for a down payment, I want to see three things. I want to see your tax returns, I want to see your credit history, and I want to see your current bank balances. That is a lot of information, and obviously most people aren't comfortable sharing that kind of information because, number one, you got a lot of identity thieves, and then you have a lot of thieves in general who'll just steal your money instead of your identity. But the bottom line is, a lot of people ask me all the time, they're like, yeah, could you review my credit and this, that, and that? I look at your credit, yeah, your credit tells a couple of things, but it doesn't tell the whole story. Your credit tells part of the story. It's those three things. Your credit tells part of the story. Your tax returns tell me your job stability. They tell me your income stability. So your tax returns are the next thing that your mortgage broker or a bank is going to ask for. They want to usually see your last 3 years worth of tax returns. When I went to buy my last house, I walked into that office. I already knew what they were asking for. Because I wanted to get it done and I didn't want to do it myself. I wanted somebody else's hands in it because the people I went to were very, very professional. So in any event, when I went in there, I already knew what they wanted, so I already had it ready. They wanted, obviously, your social security number because they were going to pull up your credit. They were going to pull up your credit report. They want your social security number. So anytime you give your social security number, automatically understand that they're about to run a credit check on you. Automatically. So they want your social security number to do the credit check. They want your last 3 years of tax returns. Now, I did them one better. Because I knew they were going to say 3 years, I gave them 4. And when I gave them 4, I had the 5th just waiting just in case. Now, the beautiful thing is, unlike the old days where they had to actually call your job and verify your employment, nowadays, when you get your tax returns, you can get the digital tax return, and your digital tax return is just a file. So I keep all of the files for my last 10 tax returns, my last 10, because I add one every year. I keep the files on my personal servers. So as soon as they ask for it, all I got to do is go onto my phone, say, hey, email this guy my tax return 1, 2, 3, 4, 5, 6, 7. Boom. He gets them all. And all they're really doing is they're checking your gross income for the year and they're checking your employment to make sure you've been at the same place and you've been there for a while. And you've been, gradually earning increases in your money. It really depends on how expensive the house you're buying is. Because the bottom line is, the third thing they're looking for is your down payment. Now, if you're trying to buy $1 million house, and they say, well, yeah, you're going to need 20% down or 10% down or something like that. Like if you're trying to buy $1 million house and they say we're looking for $100,000 down. Okay, well, you got to have $100,000 down. That's it. So for these people who get turned down, my question is, did you have the down payment? Then when it comes to credit check, if you're trying to buy $1 million house or a $500,000 house or a $600,000 house, yeah, they're probably looking for a credit score higher than 750. That doesn't mean that you couldn't get it with a lower credit score. It just means that they're probably going to ask for more money down if you have a shitty credit score. But if you have a 800 or better, chances are you're not getting turned down. If you and your wife, if you're a man and your wife, and both of you have over 800, chances are you're not getting turned down. If you have credit history that shows a relatively clean credit history, because nobody's credit history is perfect. Even my credit history, I told you the story before. I'm not perfect. I defaulted on Discover card back in 2005 when I was in college. That fucked up my credit, took it down to a 550, and I had to gradually build it back up by making all payments on time, reducing my debt by making all payments on time. I had 3 jobs. So nobody's credit history is perfect. And at this point I don't even think they expect it to be. I think they expect people to either be fucked up by student loans, a personal bankruptcy, or possibly a car note. Now, back when I was a kid, you had cell phones fucking up people's credit scores because all these stupid motherfuckers were running the Sprint and they were trying to get these phones that they couldn't afford. And when those bills came and they ignored them, Sprint was screwing their credit up. I had a friend, he owed like $2,500 on a Nextel phone bill. And if you don't get paid fast enough, it's kind of hard to pay off that money. And you say, well, how's that possible? How do you owe $2,500 on a phone bill? Well, it's very simple. Imagine if you go right now to Apple and you buy two iPhone 13s like the one I'm holding. Now imagine you buy two iPhone 13s and each one of those things is $1,000. Right there, your bill's $2,000. Now imagine you have three kids and each one of them wants an iPhone. Now your bill's $3,000 or $4,000. Oh yeah, your phone bill can be high. Why do you think Apple Card came out in the first place? Apple knew that they were going to raise prices on this shit. They did. I don't know if they really knew about the supply shortage, but they knew the prices were going up eventually. So what they did was they said, okay, you know what we'll do? We'll offer a credit card with Goldman Sachs, MasterCard, and we can charge whatever we want. We'll make Apple Mac Pros that cost $75,000. What? I'd never pay that. Oh, no. But this one has 3 graphics cards, 3 this, it's got 6 that, and it's got 7 this. Oh, shit, man. Yeah, well, if I built that with somebody else, it cost $80,000. So yours is $75,000? Okay, I'll sign on for the $75,000 Mac Pro. So, yeah, I'm not surprised that people's credit is fucked up because a lot of y'all don't know how to say no to your kids. And a lot of y'all don't know how to say no to yourselves. Like, for instance, like right now, I can go out and buy anything that I can think of short of a Bugatti Veyron or Bugatti Chiron. I can pretty much go out and buy anything I can think of that's like less than $1 million. I can pretty much buy. But I know how to say no to myself. Like, I'm looking at my ceiling fan right now. I can say, I don't like the ceiling fan. I want to go out and get a new one right now. Now, I know how to say no to myself. I know how to you know what? They got these new televisions that are 100 inches. You know what? I want a 100-inch television so I can watch violence in 4K and a 100-inch television. No, I know how to say no to myself. A lot of y'all don't know how to say no to yourself. A lot of y'all don't know how to say no to your children. This is the reason why we're where we're at. That's the reason why we're $30 trillion in debt. That's the reason why it appears that we're going back to the subprime crisis. Because not only is there a crisis right now in homes and affordability and availability, there's a crisis in auto loans.
And that payment. April Cervini is making it work. However,
we're talking on average 15,000 repos a day nationwide.
Mark Zane owns a local repo business and serves as the president of the Nevada Association of Licensed Repossessors. He says repos all but vanished during the pandemic because banks were working with car owners to defer payments. But those days are ending, and banks are about to drop a repo bomb in the next few months.
We're telling the national lenders, don't wait that long, because if you hit us and blow us up with everything that we believe is coming because of the way the economy is currently, then we're not going to be able to service those contracts.
While it may not look good, economist Mike Pequeen says it's not a worrisome trend because most of the repos are cars purchased when people were flush with pandemic stimulus money.
But it's really just limited to that 2-year period where the majority of this is, which does seem to indicate that it was a strange time, which we knew, and people were making economic decisions based on strange economics about how much they had in their pocket, which was not a sustainable amount of money.
Well, Pequeen says that there could be an upside to the repossession surge. As more repos hit the market, he says it could help bring down the prices on used cars. And we saw those used car prices during the pandemic.
And there's a crisis in student loans. Just about every loan, there's a crisis. There's a crisis in credit cards. All of it is because you don't know how to say no to yourself. You don't know how to say no to your kids. And you don't know how to say no. You don't know how to just say no.